We've got Steve Cochrane joining in on the show right now. Steve, hi, morning. Just trying to guesstimate as to what is it that you do in these volatile times. The fact that the Dow day before was down 786 points. Yesterday, we've seen an 1,100 point plus rally coming in. And then the IMF announces a $50 billion package. Do you think that's going to be enough to comfort concerns on global growth at a time like this, which is so uncertain?
It is so uncertain. In fact, I don't know if anybody really knows how much it will take. But I think the fact that the IMF is stepping in and helping take the lead on a global scale is remarkably helpful. One of the uncertainties that I've seen in terms of trying to look forward on the economic impact across the world through the Asia-Pacific region, South Asia, Europe, the U.S., is the differences in public policy response, both in terms of fiscal policy and monetary policy, but also in terms of the public health response. Different countries are reacting in different ways. That's made it so hard to come up with a definitive scenario of how this might play out because there's so many uncertainties. If the global agencies are beginning to take the lead here and provide some guidance and help coordinate action across the globe, I think that's certainly helpful in terms of clarifying where this may go in the coming weeks and months in terms of the economic impact anyway.
Steve, we've got the markets up overnight also on the back of news that Biden seems to be, moving into the front of the race on the Democrat side. So now we're going to have to throw in politics as well, and that could add further tumult when it comes to the U.S. markets, at least. How do you see this shaping up in terms of really risk assessment now over the next a few weeks or a couple of months, because it looks like it's going to be a rocky ride?
I think it is going to be a rocky ride. It's a good assessment because, we really, before the coronavirus even appeared, it looked like the global economy was going to get a bit of a push from the Phase 1 trade agreement between the U.S. and China, and there was kind of a clear vision of, good, the global economy ought to see a little bit of acceleration. And then the next uncertainty is what comes out of the U.S. in terms of trade policy, depending on the outcome of the election. That was like the next big risk event that we were following. Then all of a sudden, the coronavirus inserts itself in the near term and upended everybody's thinking about the economy for 2020. I think we'll know in 2-3 weeks' time where the global spread of the disease is going, whether it actually turns into a pandemic or not. I think the odds are rising, even if conditions seem to be getting better in China. The spread is advancing in Europe and the U.S. But we'll have a better idea in the next couple of weeks, and then we'll have a little more clarity, I think, in terms of what the true risks are for the second half of this year. The election's still there. That hasn't gone away, of course, and we'll know whether we have to factor in a pandemic and truly what could be a global recession, or whether it may be something less than that.
Do you still see more scope for central bank action, considering we've only yet seen the Fed so far, and that too wasn't something the markets really reacted to?
I'm not. I think there's a fairly high probability that the Fed will probably move again, maybe another 25 basis points at their meeting later this month. It's such a tricky thing in Europe because interest rates already are essentially at the zero bound in Europe. So the European central banks really have to think clearly about how they execute policy, of whether they have more quantitative easing or actually take rates more negative. In Asia, at least in the Asia-Pacific region, there's already been some reaction by central banks. A number of countries have eased rates, and there is space for central banks to ease further in Korea and Malaysia, Thailand, Indonesia, Philippines, and such. And we could very well see some more easing across the Asia-Pacific region. I think that's perhaps where we're likely to see a more concerted action going forward.
All right, Chief, appreciate your time and thank you for joining us.